Right, yes guys, welcome back to another one, and today we hit 2 break-even trades
Order
on
filled.
the date of the 20th of January, and this was the London macro longs that we took. So we had a shift in market structure on both NQ and ES, and then we inversed that order block on ES, so this was valid. We had a bullish bias with a sweeper sell side. This was clean, so we prematurely entered off the tap of ES, and we're taking this with a 7 contract size, as the stop placement was a little bit bigger than anticipated. So simply match the dollar amount of your contract sizing and it's not an issue. So going into this trade, we're looking to trade our stops as usual at the first short-term high, and then we would manage the trade as we see price action move in our favor. But this did end up being break even, and you will see how that plays out. So there we have it, marked out the first short-term high. That's where we trade our stops. So this is basically already break even. Majority of the risk is taken off just from the first short-term high being swept. We don't want to see price return to that point of the short-term low, then we would be taking out the position. And this is how you have key risk management, guys. Absolutely key. It's so key. Because in the long run, that is how you're actually gonna maximize your profits. Because you could be hitting bangers after bangers after bangers, but then if you're taking full stop outs, there's a lot of scenarios where you can avoid actually getting stopped out of that amount, and that will actually compound into being quite a substantial amount over the course of the year or the month or the quarter that you've actually lost. When if you simply trade your stops as your plan says so, then you would have lost way less. And that's why risk management is absolutely key. It's absolutely key to follow your system. And there's some people who would close out at the high, or as it's getting close, they'll like panic and stuff. Like, you need to realize that you need to follow your system, because if you are just closing out early, you will lose out on so much profits, and your risk to reward is just completely cooked. So some people say, oh, risk to reward doesn't matter as long as you're making money on the trade. Yes, all right, making money on the trade, but who's going to be making more? Someone who follows their plan, that is consistent, and they know is profitable over the course of a year, where if it's a break-even trade, it's a break-even trade. That trade wasn't meant to win. It all plays into the parts of the probabilities. Whereas someone who just closes out early, and then when they actually do get close, they're not hitting any full TPs, because then that horrible habit of just closing out early when it's getting close to TP, it can be very harming. But yeah, at the time of recording this right now, we're going to be moving to a new apartment in 2 days' time before we then head back to the UK, because I've spent a decent amount of time here, 2.5 weeks, and I've been very happy with the experience. But now it's time to go back and reflect and see if this place is the right fit for me. But yeah, we can see here that price is moving a little bit choppy at the start of here, and we could potentially be seeing a move lower. I mean, we are trading into a 5-minute bearish gap. With these reversal trades, you're always going to be trading into a 5-minute bearish or bullish gap. It's very highly unlikely that you're actually not trading into a reversal gap, which is why you'd usually need the other biases to be aligned as well, because in this scenario, price didn't tap into the 5. Actually, no, I think the bias on the screen is wrong. At the time, it was wrong. It's not that I had it wrong, that I didn't know what it was, but I had it in my head. I already saw the time frames, I just didn't bother changing it. Or maybe it is correct, I don't even know. I can't even remember. But the bus is 100% bullish. But what I'm trying to say is, yeah, there you go, I deleted it, because I was like, I don't want it to mislead people to think that's how it was. But it must have been like the 1 hour, I think, was bullish as well, because price had dropped a substantial amount since the first London macro. So we're currently inside of the second London macro. And there we go. So price does take that short-term high there. and that's where I would move my stop to break even. On some of my prop firm accounts, I have moved my stop to the short-term low, where you see that black line where I've drawn it out. That's the short-term low. I did move some of my stops there, but for my live account that you can see right here on screen, I've kept it just at break even, just at break even. Just in case it did sweep the low and want to go higher, I gave price a little bit of wiggle room, but you can see how aggressive price was coming, so I was like, yeah, I'm gonna just close this is gonna stop me out. Yeah, out of that one. So lovely stuff, guys. I'll catch you in the next video. Thank you for watching.